So let's talk market fundamentals with Arindam Ghosh, Chief Executive Officer with Blackridge Capital Advisors, who joined us live from Mumbai. Arindam, morning. Thank you for joining us. Arindam, we've reversed quite a bit in the last 3 days. Nifty has lost over 100 points. Do you think the best part of the summer rally is behind us?
I think, Nikunj, what is really happening is news flows are really keeping markets on the edge. We've now heard what the Fed had to say regarding liquidity and how they plan to really look at QE3 over the next 3 to 6 months. So clearly, I think it's a combination of news flows, both from global as well as from the local market, which is actually making the market move in different direction. I think liquidity is what has clearly been driving the markets up. So any threat of the liquidity tap, being, or the possibility of the liquidity being turned off, or the possibility of the U.S. market having recovered and the hopes of a good data on the labor front, on the housing front. I think a combination of all these, is actually what is playing out. So I think one can really argue, whether it's more fundamental driven. We have always believed that it's not so much of the economy, but really the markets which have actually run ahead, which is where the scare is.
Arindam, in the near term, do you think though that the rupee falling to a 6-month low nearly could be deterring or dampening the sentiment somewhat?
I think the rupee, as we all know, has been under pressure. I think this is in line with what we have seen with most of the other Asian currencies. We'll have to really see how yesterday's announcement by Fed has its impact on the dollar over the medium term. But the sense is that the dollar index is going to keep pushing up, and probably it'll cross 83, 84, and it'll continue. That would continue to keep the pressure on the rupee. So I think overall, on a 6 to 9 month perspective, I think the rupee, our sense is probably on a broader base basis can range from 53 to 58, 59 as well.
Okay, the big story yesterday was L&T, and I just want to revisit what brokerages are now saying after their poor Q4 display. According to Citi, L&T has disappointed on all counts for the quarter gone by. It is evident that the execution has been a key issue, and their FY14 guidance, which is this year's guidance, is slightly aggressive and optimistic. CLSA, they've slashed their price target, whereas Nomura and Deutsche Bank, they have not changed their rating. In fact, they have just knocked off their EPS estimates for FY14 marginally. Arindam, do you think L&T numbers are some kind of an harbinger that it is too early to assume that Indian economy has recovered? Because L&T is India's biggest engineering company. If India's biggest engineering company is struggling, it clearly means that the stress on the capex cycle is not over.
I would say, yeah, of course, L&T as a company is the bellwether, for the sector, and clearly the numbers have been a tad disappointing, but it's not, because of, I think, the performance of the company in the quarter. I think it's an excellently managed and well-run company, but clearly, I think what is visible is the economic slowdown, and importantly, I think what is also kind of showing up is the fact that we've had a very delayed monetary easing stance, and unless and until we see the lowering of the interest rates and the transmission of the interest rates and the interest costs of the companies go down, I think overall, I think the environment is going to remain extremely challenging and sluggish. Obviously, I think what most of these companies would now be looking at is to how to go beyond the domestic market and look at export market, where again the situation is not really so encouraging. So in an environment where the external demand continues to remain extremely challenging and weak, the domestic situation is not really supported by efficient execution of orders, or the projects getting extremely delayed and slowed down. I think overall, I would say the challenges would persist, but I think within that space, I think there are companies which continue to remain extremely strong, and with any uptake or turn in the cycle, we would definitely see the stock prices catching up as well.
Arindam, I would like to draw your attention to some of these consumer names, and again on a daily basis we endlessly argue about valuations for some of these consumer names. They are rich, they are expensive, they are at historic high, but that is where all the price action is. On a daily basis, HUL, ITC, Colgate, Sun Pharma, Lupin, they are hitting new highs.
Clearly, I think within that sector, obviously there are some exceptional companies where I think on a longer term basis, that's over a 2-year, 3-year horizon. From a long only position, I think these are opportunities to kind of come in at even these kind of levels, whether you look at the price or you look at the valuation. I think these companies will, irrespective of where the growth is overall and the sector growth is, their top line I think would get supported. They have extremely cost efficient structures, which will also support the margin for these companies. But I think near term what we have actually been seeing in terms of right through this entire if you see the cycle of how liquidity has been pushed into the system, whether it was through the 3 QEs that we have seen coming in from US, though the nature has been a little different in each of the case, but actually this money has really moved into sectors and into stocks which are typically frontline and leaders. So obviously one needs to stay cautious, because a lot of these short-term moves can actually get reversed if there is any possibility of a reverse flow of liquidity for whatever reason. But if one really has a long-term hold on the companies that you mentioned, I think they would definitely end up creating wealth over the long term.
Arindam, what's the expectation from SBI, which is slated to, come out with its earnings today?
The banking sector, as we all know, has actually been one of the strong performers. Of course, so far, what the earnings calendar has again reaffirmed the consensus view that the private sector's bank has actually been doing well. The risks and controls are better managed. The levels of NPL are much lower. So I think when we look at some of the public sector names, of course, it's been a lot more disappointing. The numbers, of course, will be keenly watched. I think it will be an indicator of how PSU banking space is actually is looking. But again, I think fundamentally strong companies in every sector would continue to remain a buy, from a long-term point of view.
Apart from buying private banks, what else are you hot on or bullish on when it comes to the financial as a group of financials as a space?
I think largely, the concentration has been within that space with the private sector banks. I think that is where, if you look at how portfolios have actually been positioned, it has been around those companies which are well capitalized, where we see the NPL is much better managed. which has actually been run by extremely competent management, both large and in the mid segment as well. Some of the new generation names as well, I think, have been top performing companies or organizations. I think those are that is where basically the liquidity and the investor trust and interest has actually veered around. So I don't think that is going to really change, because the overall environment in the next 1 year against the backdrop of upcoming elections would continue to remain challenged, and whilst the financial sector is actually should actually start performing much better as opposed to the other sectors, and as in how the cyclical recovery kicks in, and there is more evidence around that. So I think typically the private banking sector space is where the appetite, the built-up in appetite has been far more evident.
Arindam, if you can share with us which are some of the key consumer names you have exposure to?
Nikunj, not like to get into specific company names, but overall I think we continue to stay overweight on that sector.